Welcome back to Financial Trading. In this video, we are going to understand how to trade 50 and 200 EMA. In this video, we will not talk about a theoretical understanding of the EMA. We are going to see how EMA works for us and how we are going to use it. So let's begin this video. Go to tradingview.com. Once you are on tradingview.com and you have selected the stock to trade, go to 15 minutes time frame. After this, come to indicators, click on it and type EMA. Over here, EMA 20, 50, 100 and 200. Click on it. The indicators will appear in front of you. Over here, go to settings, turn off 20 and 100. Make the 50 bright in color and 200 also. Once you're done, click on OK. The main role of EMA is to provide support and resistance. In this video, we are going to combine two EMAs, 20 and 200 EMA. In this video, I will be showing you a strategy how you can trade with them. The first thing that you need to remember in this strategy is that whenever a 50 EMA cuts 200 EMA from below, that is, a smaller EMA cuts a bigger EMA, that means it is a buy signal. However, we can use this similar setup to go into a short trade. So right over here, you can see the orange line is the 50 EMA and the blue line is the 200 EMA. Whenever 50 EMA cuts 200 EMA from the bottom, it's a buy signal. So right here you can see the orange line has cut the blue line and the market went up. Now over here, the vice versa case. The 50 EMA average is cutting 200 moving average from the top. That means it's a sell signal. So the market went down. Now, this is not that easy to use. It is a simple strategy where you need to follow few rules. The first rule is that whenever 50 moving average cuts 200 moving average from bottom, that means 50 moving average is at the bottom and 200 moving average is at the top. Now what happens over here is, when we get a strong bullish candle cutting 50 moving average, you get a target of 200 moving average. That means you are going to buy. So the 200 moving average becomes the target for you. Opposite is the case when 50 moving average cuts 200 moving average from the top, and when you get a bearish candle closing at 200 moving average, the 50 moving average becomes your target. Now do one thing, go few minutes back and listen to the words I said and make a note of it. Now let's use this setup into the charts and see how it's working. $50 moving average cutting 200 moving average from the top. Over here, you are not going to trade over here at this. The second thing that you need to remember is that the distance between the two EMAs should be big. The distance between the two EMAs should be big. It should not be small like this. It should be a big distance because this is a high reward, small risk trade. You are not going to increase your risk in this. Your reward should be high. So we are going to use a strict SL over here. EMA, cutting 200 EMA from the top. This is your first rule. After the first, second point is you should get a candle closing above 50 EMA. With this, the 200 EMA should be at the top. And remember the distance also. So over here, when 50 cuts 200, the market fell, right? That is a bearish signal. But in this case, how the traders are going to make money is that they are going to buy in this case. Now, how they are going to buy is that over here, this is a strong bullish candle. If you have seen my previous videos, you will know this is a strong bullish candle. So you are going to buy over here. Now, suppose you took a buy trade over here in 15 minutes time frame. If the 10 minutes candle was closing over here, your target would have been this and your SL would have been below the previous candle's low in this setup. No one is going to show you these things. So we'll be covering everything in detail. So please be patient with it. So now the SL hit over here, okay? Second case, again the market tried to reverse. You got a closing of this and the market went up 200 moving average, target hit. The target got exactly hit and market fell from there. Now I'll give you one more tip over here. The first thing was that the candle closed above 50, 200 was at the top, and if you combine one more thing, now if you have seen my previous videos, you will know what I'm talking about. That is, now this is a double bottom pattern also. So double bottom, 50 EM with a bullish candle, 200 moving average at the top. Small risk, big reward. Let's see one more example over here. The thing that you need to remember is that the closing of the candle is going to matter for you. Over here, you will not take trade by seeing a bearish signal over here. You need to wait for the market to go up over here, close a bearish candle over here. Then you would have taken a trade with this target. Now again, market fell. Again, market went up. Bullish candle. Previous candle low is your SL and a target is this. Hit. Again tried to bounce back and went up. Now what the traders do is that they are always looking to book. They are always looking into profits first. Whereas the real traders are going to see what is the loss they are going to take first and then the profits. First, the trader should be ready to take the losses. Once you start taking the losses, not just any losses I'm talking about, a genuine stop loss. Once you have started taking 2, 3, 4 genuine stop losses, you will start learning. And once you see the results in front of you, you will start becoming a real trader. Moving forward, over here 50 moving average at the top and and 200 is at the bottom. But what's the one rule that I said you? If the distance is less, you will not trade. Let's go see more charts. Over here, this is a buy entry. If you enter at this candle also, your target would have been this 200, but it did not come till there. If you see a reversal before achieving your target, don't be so adamant that the sir have told you or you have seen some video. No, sir have told you 200 moving average should be the target. Be sensible, take the profits, book the profits and wait for another entry. Don't let the profits go from you. Your entry would have been here and SL would have been previous candle's low. Over here, the market went up, 200 moving average at the top, 50 moving average at the bottom. The distance is also good. You can enter this trade over here. Entry over here, SL. There's no previous candles high over here, so over there SL and your target over here achieved. Over here market gave a good break and fell and kept falling. Now over here one entry was spotted, but this is not the candle we would enter. Go to the previous videos and watch the candles I have shown and combine them with this strategy. Over here definitely you should have entered. A real trader will enter at this point, but your SL will get hit. Over here, this is not an entry. This is not at all an entry. No entry over here. Over here, yes, definitely it's an entry. This is a good bullish sign. You should have entered this trade and you should have seen and you should have taken this target over here. The small stop loss over here and the big target. Over here, 50 moving average at the top, 200 moving average at the bottom. Good sell signal, target just previously you have taken. Always try to take the targets before the visible levels, because many good traders are sitting in front of the screen and they know that this level is going to be the reversal area, so they are going to start booking profits. And some new traders, they are going to be adamant on taking that target only, whereas it's not going to happen always. So remember that also. So I hope I've made myself very clear on this setup. Low risk, high reward strategy. Now if you want us to make more videos on the similar topic, let us know in the comments.